I used to teach a budget course. And in this budget course, I teach Grandma's envelope method. You got an envelope for groceries, an envelope for rent, an envelope for this, an envelope for that, envelope for holidays, all this kind of stuff. And, you get your salary and you just break it out and you just put money in the envelope. And that's how Grandma used to run the household, right? Well, I was working with clients and giving them, what Mike McCarroll calls crap gap. GAAP, G-A-A-P, is generally accepted accounting principles, and he says it's crap gap, okay? Because what we're teaching our clients, accountants, we're taught like this, is that your profit is what comes out at the bottom. It falls out of your operations, a little bit like, going to that bathroom, okay? Profit is the last thing you think about. And what he says is turn it around the other way. Think about profit first. Pay yourself first, and then organize your business around that as your reality, rather than that as your result. It's a brain shift.
So what percentage would you use? Is there a range for business owners of different types, or what percentage would you tell business owners to save first?
Yeah. So it depends on the type of business.
Yeah.
It's a generic number.
Yeah.
So 5%. 5% of what we call real revenue. So real revenue is not your top line sales. That's fiction. Top line sales are fiction.
Damn, is it?
It is.
I like looking at that number though. It's a fun number to look at.
It's not about what you
come on, Peter. It's a fun number.
Keep. Yeah. I know, it's a fun number. So in profit first language, we're taught to look at what's called real revenue. So in accounting language, you might talk about gross profit. So you might sell $1 million, but the stuff you sell costs you $400,000 to buy. Your gross profit is $600,000. Well, that's your real revenue.
Mm-hmm. Even that's not a real number.
No, it's not. No. But that's the number you've now
I'm
got.
Getting sad. Now I'm getting sad. Yeah, keep going.
Yeah, now you've got to pay staff.
Yeah.
You've got to rent your facilities, and you've got to pay the power bill.
Everything.
And
paper, pens.
So that real revenue number is the number we focus on, because that's what you get to control. You get some control over your margins, but that's the money you get to use. Okay, so 5% of real revenue is generally the ideal target for your profit allocation.
Okay.
So every time you get paid, so you work on a rhythm, you maybe do it twice a month.
That's more than fair. 5% seems more than fair.
And this is not paid to the owner. This is actually profit retention in the business. Okay, so for every dollar of real revenue you bring in, you're going to take 5 cents and put it in a separate bank account.
So the practical implication of that is you'll get your clients to open another bank account?
Oh, my clients open at least 7.
I will fight with people about this point. I will literally argue with people. You know why? I tell them to do this in their personal lives too. And you know what they'll tell me? Tom, I don't want to pay the extra fees. And I would would you stop? If you tell me that again, I'm going to take these papers and I'm just going to throw them at you.
Yes.
Because stop talking to me like that. And then if I convince them to go to the banks, then the bank will convince them not to do it.
Absolutely.
Because of the minimum fees they need. I'm like, you're thinking like a poor person.
Yes.
The people who make and save money don't concern themselves with such minutia here.
No.
Open the freaking bank accounts.
Yeah.
So you get people to do it.
Yep.
Good for you.
So most of the time we say, listen, you're going to pay more in fees, but you're going to be more profitable. So what would you rather have, lower bank fees or more profit? Well, it's a no-brainer, right? I'd rather have more profit. Okay, so paying bank fees is a challenge to manage. I'll give everyone a free hint here. I'm not paid to say this, but Bank of Montreal is my go-to bank.
Why?
Because they have an account called the e-business account. 0 monthly fees on a business checking account.
The only problem with the Bank of Montreal is their name is also similar to the Montreal Canadiens.
Yeah,
so because of that association, it's difficult for me. But okay, I guess if you want to save some fees.
We'll just say BMO then.
BMO, okay, BMO. Okay. BMO, I like that better. Yeah,
so they have an e-business account. And so you can have savings accounts, but you can also have a free transactional account. Deposits are free, like electronic deposits are free. You only pay if you use a teller. Okay. They also have one of the best online banking for business suites on the market. Now, it's still a bit kludgy. It's still really more designed.
Why? What is it that you like about that?
Well, so one of the things they have is you can create templates. And I love their template functionality for doing transfers, because on Profit First, we're moving money between accounts a lot.
Sure.
Okay. And so you can create a template. And then you just bring up that template and it says, I'm moving from the income account to the operating expense account. I'm moving from income to profit, income to owner's pay, income to GST, income to income tax, etc. And so on one page, you just go, here are the numbers I'm moving. And I give my clients a spreadsheet. So they put in their income number,
that's pretty good.
And it spits out the amounts to transfer.
Okay.
They take that and just put this into this template and hit go.
No way.
And it just does all of it in a matter of a second.
I don't think TD has that, Nick. Do you think so?
They do have a more advanced version. I just don't know whether it does all of these templates.
On the small business side, their interface is like a little bit modern. Mm-hmm. On the commercial banking side, it's
from 1997.
It's a little more industrial, and BMO's is the same. It's a little more industrial looking, and
we have to use.
It's very kind of you. The words you're using are very nice.
Yeah,
it looked just old and crappy to me.
I was on the phone with some support because for one of the things we have here, we still have one Windows computer, and we have to use Internet Explorer. We have to use they got rid of Internet Explorer, so we have to use Microsoft Edge in Internet Explorer mode to be able to access this one functionality on the TD side.
Really?
And I'm talking to these guys. I'm like, guys, like
it's literally a crime at this point.
Yeah, and even their support's like, oh well, we're told it's coming.
But I got to admit,
telling me that for 2 years.
But I got to admit, the TD web interface for just small business stuff in general,
and
on
the commercial side,
to move stuff around is really good. It's really good.
It's good. I use TD and Bank of Montreal.
Yeah.
So TD is my secondary bank.
Got it.
BMO is my primary bank. Don't tell TD.
Okay.
Because they think I'm still there.
Okay, so you take 5%.
Yep. So you take 5%, you put it into the profit account, you take an amount of money for owner's pay, you put that into another account, you take your GST money, put that into a separate account. And if you only learn one thing about Profit First, it's take your GST money and put it in a separate account.
The first time I had to pay, when we got our real estate licenses and I didn't understand, I owed this GST.
Yep.
It's a kill. Oh my gosh, a heart attack.
We've seen that happen to a lot of people. Where they
I just spent it all.
Yeah.
I just spent it.
Yeah.
But anyway.
So Mike in the book, he talks about bank balance mentality. Most business owners run their business by how much money is in their bank account. And when you've only got one bucket, you feel like you're rich. Oh, I've got all this money in my account. Can I afford that new car? Of course I can. Look, I've got all this money in my account. Yeah. But you forget that your GST installment is going to be $25,000. Your income tax bill you haven't even paid yet is another $15,000.
Payroll's coming out.
And so the whole idea of Profit First is that it's like the dietary principle of small plates. Separate your money into different buckets. Only spend from one bucket at a time.
So this kind of started with my kids since they were young. I use jars to do it instead of this, because at the beginning it's just literally if they're lucky enough to get some cash from a birthday or something, I tell them you put this much in a jar and this is the savings jar, this much is your spending, and now you can go spend freely. It doesn't matter to me what you spend on. It's your money to do with as you please, and here's the savings. And as that builds up, it's been a really nice strategy. I didn't realize adults need it so much. So now I've been really going around telling a few people that will remain nameless, here's what you need to do.
Yes.
Go to the bank and using what you're saying in their own personal lives, even if they don't have their own business, just in their own regular life, go and make 7 or 8 accounts.
Yes.
We still keep all our accounts. Ours are like insurance, recreation, vacation, savings, taxes. I think kids, just like a general kind of kids.
We have a few, we've used Tangerine because it's an online bank, so same thing. There's no fees. So we have a number of them. We have a number of them up there. Then we just transfer into one account, and then we can split it up that way.
It's just changed our lives. I think I started that when I was in my 20s when I just got married. So I guess right around late 29, right at the end. And we just reverse engineered how much money we spent on each of these things the previous year.
Yep.
And then we figured, okay, that's how much we need for the future year. So let's just, every time we get paid, take that percentage of the income that comes in. So we get paid. So this is when I was getting paid through a salary. Salary would drop into one account. And on payday, Carol would go in and take the percentages that we had in a little spreadsheet and move like, $143 from here over to here. But it literally changed our lives because then when the kids had something to pay for, we would just say, well, what's in the kids' account? If they had to pay for hockey or soccer or something like that. And it was all accounted for.
Yes.
It really, and I'm sure we weren't even perfect at it, but it changed our lives dramatically.
Yeah. I've got a client out in BC, and when they started working with me, they were about $75,000 in debt. And they were just doing single bank account, method. And
single bank account method. I've never heard that. Yeah. That's
and a line of credit. Of course, a line of credit's like free money, right? Or a big overdraft.
It is.
It's like free money.
Yes.
And so the first thing we did was we just had them go and open up 7 bank accounts. We gave them a formula. And for the next 12 months, they just did this formula and paid for things out of those buckets. I didn't even do much else with them. We just put that simple, I could just call it the mechanics of Profit First. Just put the mechanics in place. Well, a year later, their line of credit was in funds. They had gone from being $75,000 overdraft in their line of credit to being
How happy
funds.
were they?
And they didn't know what they had done differently.
Amazing, no?
Yeah, absolutely. Now the banks take them seriously if they actually want to borrow money. if they have a need for money or to refinance, because they've shown that they're not relying on a line of credit to run their business. This is one of the biggest mistakes business owners make, is that they run their business relying on their overdraft or their line of credit. If you're relying on your overdraft or your line of credit, you are in debt, and that can get pulled with no notice. The banks can just decide that we no longer want to extend 50,000 of credit.
We've seen that.
So many
have
friends.
that paid off in the next 3
and
days.
some businesses need it. We're chasing receivables and they need lines of credit. But But I see what you're saying. Like if you're living on, if you're
Always
operating
in the overdraft.
Yeah. Well, cool, Peter. So, is there, before we wrap up, anything else that you wanted to talk about? Time has passed quickly here.
Yes.
It's funny you're bringing this up though, because literally tomorrow, for one of the Rockstar Minute videos, it's been like 6 weeks in the making. I haven't got to it. I went to the dollar store and I got jars, and I'm going to make a Rockstar Minute video. The jars are sitting outside here. I'm going to show you before you leave, because that just changed my life when I heard this concept for the first time. And I heard it as jars.
Yes.
Like literally go home, get these jars, label the jars, savings,
As
taxes.
simple as possible.
And that's that, as embarrassing as it is to admit, that changed my financial life.
Yeah.
Because until that moment, any money that had come into my hands, I would just like spend it. I thought it was mine to spend.
Well, you had no system. It was a system.
Exactly.
From
That's right.
nothing.
And the Profit First methodology is a very simple system. The hard part of Profit First is changing the way you think about your business so that this is now your reality. This is the challenge we have with all of our business clients. So we can give them the mechanics, but if they don't change the way they think, nothing works. And they say, Profit First didn't work for me. I'm like, well, Profit First will work for you. If it didn't work, it's because you didn't work for Profit.
You didn't change, because that first year or 2 or 3 might sound like forever, but you might have to change your standard of living a little bit because you've been spending everything that comes into that primary bank account. Exactly. And when you do Profit First or the jars or the grandma's envelope strategy, you have to reduce your standard of living a little bit because you're pre-allocating to these other expenses that you need in the future. So if it didn't work, it just means they didn't sacrifice. But anything, whether it comes to anything in life, the long-term, I think you mentioned it, that properties are a long-term thing. Yeah. Anything that is of value requires some long-term thinking and commitment.
Yes.
Anything.
Yes.
So if you can just get through it, I would argue that 1 year, everyone adjusts. For us, when we did it, I think we adjusted within a few months.
Yeah.
Like this is just, we just have this much money to spend now on, these things instead of a little bit more. It wasn't like that big of a deal at all.
Yeah.
You kind of adapt really, really quickly.
Yeah. The mental shift is that you have to rethink about how you make financial decisions based around how much money have I got to spend rather than how much should I spend.
Correct.
Okay.
Yeah.
Well, how much should you spend? You could spend an infinite amount of money. But how much can I spend? Well, that's now limited by how much money you're actually allocating.
Yeah.
And you've got to right-size your business to fit that.
And the discipline that comes from that kind of approach is really freeing. Like I would think between Nick and myself, Nick is much better at money management than I am just naturally. He's just going to handle things better. I need these little processes, and I would consider myself a little more loosey-goosey with kind of managing stuff. But these little processes in my life have really helped me. Because if I didn't have them, I would be that person, there's all this money in the bank account. Let's go nuts. I don't know. Let's go buy this, do this. And I know it would be silly, but I need these processes. And they've really helped change my life. It's also why I like real estate, because real estate to me is forced savings.
Yes.
The debt is getting paid down. I can't touch it. I can't press a button and sell it. You know that time where you mentioned the student rental property was left a bit messy and dirty and stuff? We've had situations like that where either Nick or myself, it's been both of us. Yep. At one point it's like, sell it, sell that property, just get rid of this. This thing's a piece of shit. Get rid of this property. And then, it's hard to sell. Not hard to sell. I just mean, you actually have to list it and get it ready to sell. And in that process, you end up cleaning it up. And then you're like, I guess it's not that bad.
Yeah.
We'll keep it. We'll rent it out again.
Literally every time I've had that thought, as soon as the property junk gets emptied out and it gets a clean, then I walk around, I'm like, it's not so bad.
Yeah.
But it's literally that, it's just the cleaning. It's almost always the cleaning.
That's the crazy thing when it comes to business as well. Because, when people start to think about, maybe I should sell my business, if they go and speak to a good broker, the good broker will say, go back and clean the house first.
Yeah.
Let's do something with this business so it's more presentable. So, that might take 2 years.
And then once you do that,
so they go away and they turn it around and they put systems in like Profit First, and they're now making a consistent profit. And then they come back and they go, why would I want to sell this?
Yeah.
I'm actually making money for the first time in my life.
I'm keeping
and,
this sucker.
and I actually don't have to work as hard as I used to because I'm extricating myself from the business. Why would I sell this?
Yeah. Especially, actually, I have a few people going through this exact situation in an inflationary environment that we might see in the next few years. Some people are having a difficult time justifying selling a business because they don't know what to do with the cash they're going to get, because then they have to put it somewhere else that's actually earning
The asset. Yep.
to protect what they've earned. So then they end up deciding, you know what, I'm just going to keep the business because the business is producing cash flow,
Yep.
and it's like an inflation hedge for me here.
Yes.
So, Peter, thank you for...